Hello, Michael Shotnik with Milestone Home Mortgage. Happy August. Hard to believe it's August 1st. July kind of came and went with a flash. And that's why I'm reaching out to give you a quick overview of what mortgage slash financial markets did during the month of July. We see some nice momentum in rates, and we've been waiting for this fundamental shift, and that's required a handful of variables to align. And I believe we're starting to see that and see the effects of it. And that is labor, that's inflation, and that's ultimately, what is so topical here in this conversation is housing. So in the labor markets, we're starting to see some cooling, and that's always an interesting topic to discuss from a rate perspective. Seeing the unemployment rate go up, a cooling labor market's a good thing, but on the streets and family to family, that can create some struggles, of course. But nonetheless, that is counter-inflationary, and that's what we've been looking to see. The inflation metrics that we track, so core CPI, PCE, are showing signs of deceleration of inflation. We all know the cost of goods has jumped up, but what we need to see is rather than a continued acceleration, we're already here. We need to see this kind of steady inflation projection, and that's what we're starting to see. And then housing has eased, so that the pace at which homes have been appreciating has eased a bit and created less what we call inflation in housing. So where's the market headed? That's a really good question, and we never really know the answer to that. But all the signs that we look at and the analysts I follow believe that we may start seeing rate cuts in September. And by rate cuts, I mean the Fed rate cut. That doesn't directly affect mortgage rates. However, it affects debt across the kind of whole economy and indirectly affects mortgage rates. And mortgage rates are generally ahead of Fed action. So if there's a strong bias towards rate cuts coming later in the year, rates will tend to get ahead of that, and that's what we're seeing. And if that continues, I really do think we'll see a lot of downward pressure on rates in 2025. So if you're considering purchasing your first home, if you're considering making a move into another home, so selling and buying, I think late this year, early next year will be a pretty good environment to do that. There should be good energy back in the market around the rate topic, and that'll create activity, and also we should see some affordability come back in via lower interest rates. To share a success story, in July, I helped a couple purchase a home. They had owned a home in Denver for a while. What they did is they turned it into a rental. Very good situation to do so financially. They were very stable, and then they moved up into Tabernash in Colorado. They work remotely, can live from wherever. So they've started to create a small real estate portfolio, and due to some flexibility they have, they're able to move to kind of their dream area where their lifestyle changes a bit. If you or anyone you know is considering the same thing or considering a purchase, a sale, a refinance, please reach out. My contact information is in the email. Would be happy to help. Thanks a bunch. Have a great rest of your summer, and look forward to connecting with you soon.